The markets are closed, but the business stories are just heating up. Hello, I'm Raine Musñgi. Catch up with us on Business Brief. U.S. President Donald Trump said he would love to get a deal with China to end an escalating trade war. Trump made the comments during a cabinet meeting open to press. U.S. Treasury Secretary Scott Bessent said Thursday during the meeting that as they settle deals with countries, it will bring more certainty on trade policy. Bloomberg reports the American leader also admitted his tariffs may cause transition problems, but expressed confidence in his plan after the White House clarified U.S. tariffs on China rose to 145%. Trump is imposing a 125% charge designed to both counter America's trade deficit with China and punish Beijing for retaliating against U.S. import taxes. The number, published in a White House memo Thursday, comes in addition to a 20% levy put in place earlier this year over China's role in fentanyl trafficking. Other Chinese imports, such as materials used in solar panels, are already subject to import taxes.
We're doing very well. It's been amazing. We had a big day yesterday. There'll always be transition difficulty, but we had in history, it was the biggest day in history, the markets. What happens with China? We would love to be able to work a deal. They've really taken advantage of our country for a long period of time. They've ripped us off beyond nobody. How people stood for it, sitting in my position, is not even believable. And we're talking about many presidents, not just a couple. But they did, and all we're doing is putting it back in shape. We're resetting the table. And I'm sure that we'll be able to get along very well. I have great respect for President Xi. He's been, in a true sense, he's been a friend of mine for a long period of time. And I think that we'll end up working out something that's very good for both countries. I look forward to it. I mean, if we can't make the deal that we want to make, or we have to make, or that's good for both parties, it's got to be good for both parties. And then we go back to where we were.
Chinese President Xi Jinping will visit 3 Southeast Asian countries next week as China steps up efforts to court partners to buffer the economy against an escalating trade war with the U.S. The Chinese Foreign Ministry said in a Friday statement, Xi will pay a state visit to Vietnam from April 14 to 15, then Malaysia and Cambodia from April 15 to 18. Some of the countries hit by Trump's reciprocal tariffs, Cambodia by 49%, Vietnam by 46%, and Malaysia by 24% have already begun reaching out to the United States for a reprieve. Bloomberg reports Vietnam, Cambodia, and Malaysia have benefited from a diversification of supply chains from China since Trump's first term, but it had also put them in the crosshairs of the U.S. leader as he seeks to crack down on transshipment of Chinese goods. Vietnam continues to dispute territorial claims with China over the South China Sea. Cambodia is considering restoring military exercises with the U.S., while Malaysia faces U.S. scrutiny over its alleged role in shipping restricted NVIDIA chips to China. Meanwhile, Beijing is calling on Washington to return to a fair dialogue.
Recently, the United States has imposed tariffs on all its trading partners, including China, under various pretexts, which seriously violates international rules and fairness and justice. The Chinese government, along with relevant economies around the world, strongly condemns and firmly opposes this. Pressure and threats from the United States will not resolve the dispute. The U.S. should return to fair dialogue. China has taken and will continue to take resolute countermeasures to safeguard its sovereignty, security, and development interests.
Well, China also said it would immediately restrict imports of Hollywood films in retaliation for President Trump's escalation of U.S. tariffs on imported Chinese goods, though analysts say the impact is likely to be minimal. After 3 decades during which China annually imported 10 Hollywood movies, Its National Film Administration said Trump's increase of tariffs on Chinese imports would further sour domestic demand for U.S. cinema in China after years of decline. The restrictions arrived before the start of the summer box office with such major releases as Mission Impossible: The Final Reckoning, which may mark Tom Cruise's last appearance in the long-running franchise, a new Superman movie from Guardians of the Galaxy filmmaker James Gunn, and Marvel's new take on the Fantastic Four. China is the world's second largest film market. However, in recent years, as local entertainment culture has bloomed, the enthusiasm for Chinese audiences for Hollywood movies has waned. IMAX said it expects its exhibition slate, which includes Hollywood, Chinese, and international films, would not be materially impacted by the newly announced restrictions. Still, the stock price of Warner Brothers Discovery, the company behind a Minecraft movie, dropped 12.5%. One of Wall Street's sharpest losses, Walt Disney Company's stock sank 6.8%. Well, Asian shares sank Friday after U.S. stocks gave up much of their historic gains from the day before. The S&P 500 was down about 15% from its peak, and analysts believe stocks are in danger of falling into bear market territory due to the uncertainty surrounding tariff policy, with analysts saying U.S. recession risk is much, much higher now. The deepening worries over President Trump's trade war initially helped pull Japan's Nikkei 225 share index down 5.6% before paring some losses. South Korea's Kospi and Australia's ASX 200 both shed at least 0.75%. In China markets, Hong Kong's Hang Seng recovered about 1.5% after opening lower for the day, while Shanghai's losses sped up to 0.6%. Now, AP reports China announced more countermeasures against the United States, and losses for U.S. stocks accelerated after the White House clarified that the United States will tax Chinese imports at a 145%, not the 125% rate that Trump had written about in his posting in Truth Social on Wednesday.
I think there's some good lessons for investors around staying invested and not trying to time the market. Being off by just 2 or 3 minutes could have meant the difference of being quite wealthy or quite not, for that matter. I don't think the markets, though, will have a long emotional attachment to this. They'll move on pretty quickly. Some of the other players, though, international partners of the United States, some of the companies that were relying on policies or not and making decisions based on what they heard, they will have a much longer memory. And you're going to see that communicated by the larger corporates in the next few weeks when they talk about earnings guidance. And I think we're going to get ready for a whole slew of CEOs to say, we don't know what to make of the next quarter or two. We don't know what to make of the next month or two. And that's going to have further impact to equity prices. And investors will do well to remember what they just experienced. Trying to time the market on this type of news item is a fool's errand.
Well, the dollar extended losses after its biggest plunge in 3 years. The yen surged against the U.S. dollar, which also lost value against the euro. Even emerging market currencies such as the Korean won and the Thai baht rallied against the dollar. Gold rose to a record above $3,200 an ounce, and concerns about the impact of tariffs on the global economy pushed investors to the haven. Bullion gained as much as 1.4% in early Asian trading on Friday. Its price of $3,219 per ounce eclipsed the previous all-time high posted Thursday when it closed up more than 3% for a second day. International oil prices also fell Thursday as concerns over the escalating trade tensions. West Texas Intermediate for May delivery decreased by 3.66% and settled at around $60 a barrel on the New York Mercantile Exchange. Brent crude for June delivery dropped 3.28% earlier to settle at $63 a barrel on the London ICE Futures Exchange. Tesla, one of the world's richest men, Elon Musk, expanding operations as it launches in Saudi Arabia. The electric vehicle giant opened showrooms in Riyadh, Jeddah, and Dammam, featuring its Cybertruck and a redesigned Model Y sedan.
I don't see the USA's politics as something that will impact us here. It doesn't affect us, and they have the right to do whatever they want. But for us, we care about what affects us in the Middle East region.
The debut in the oil-rich kingdom comes as Tesla's global sales fall. It also signals improved relations between Musk and Saudi Arabia after a high-profile feud over a potential investment nearly a decade ago. Relations have thawed in recent years, particularly as Musk gains influence in the Trump administration. A shakeup in Italian luxury as fashion brand Prada buys its smaller rival Versace from Capri Holdings. The deal was valued at nearly $1.4 billion. This comes as Versace has been operating at a loss, while Prada has defied a slowdown in luxury demand and is seeking to expand. Prada chairman Patrizio Bertelli says they aim to continue Versace's legacy and at the same time provide it with a strong platform. We have to pause for a few reminders, but the biggest business stories from around the country, keep it here on Business Brief, only on the Bilyonaryo News Channel.
Binky Web. On point. 7:30 p.m. on BNC, the Bilyonaryo News Channel.
Solar energy, matipid na, makatutulong pa sa kalikasan.
You're looking at around 20 to 40 or even 50% of savings. We have to make the proper assessment on what system size is appropriate for the house.
Dito sa Kalakhang, Maynila, iisa lang ang pinagkukuhanan ng supply ng tubig, ang Angat Dam.
Ito lang ang nag-iisang water source ng Metro Manila. Halos 97% ng water supply dito lang galing.
Pues es la adrenalina, es sentirse vivo, arriesgarte ahí con la pólvora, la adrenalina con tus compañeros y el trabajo que lleva y el riesgo sobre todo, sobreponerte al riesgo de la pólvora y las quemaduras.
Como 3 semanas nos tardamos en nada más la forrada y pintar. Ya mi hermano se encargó de los cohetes. Sí es un proceso un poco largo, es aproximadamente el preparativo de un mes de un toro y pues obviamente se ven los detalles, el diseño y lo que va a llevar de cohete.
Jack Madrid. Tech Week. Trade Talks. 11 a.m. on BNC, the Bilyonaryo News Channel.
Welcome back to Business Brief. Just when households need more electricity to beat the summer heat, Meralco announces a power rate increase. Soo-Jin Kim joins us on the line for details. Soo-Jin, go ahead.
Yes, Raine, just as temperatures begin to soar power bills are following suit. Meralco has announced a sharp increase of 72 centavos per kilowatt hour in April rates, pushing the total charge for households to 13 pesos per kilowatt hour, the highest in recent months. For a typical customer consuming 200 kilowatt hours, that means an additional 145 pesos on their electric bill, a hit that could grow even larger as usage spikes during the summer months. The main driver, a more than 3 pesos spike in the wholesale electricity spot market prices, brought by surging demand, supply constraints, and worsening outages in the Luzon grid. Transmission charges inched up as well, driven by higher ancillary fees from the MGCT's reserve market. Meralco admits without intervention, the increase could have been worse. The 20 centavos per kilowatt hour implemented this month softened the blow. This comes after the Energy Regulatory Commission ordered Meralco to return 19.9 billion pesos in overcharges to be refunded over 3 years or until fully settled. Still, officials admit that without the refund, customers would have faced a rate hike of nearly 1 peso. And those are latest updates from Pasig City. Back to you, Raine.
Thank you so much for that report, Sujin Kim. The Philippines economic team is gearing up for talks as the country faces fresh trade pressure from the United States. Washington's 17% tariff on Philippine exports could hurt key industries, triggering concerns across the region about supply chains, investor confidence, and export growth. Economic advisor Frederick Go says he plans to meet with his American counterpart to push for a free trade agreement. He says ASEAN trade ministers have agreed to pursue a strategy of cooperation, not retaliation, with bilateral talks between ASEAN states and the U.S. expected to continue despite heightened tensions.
They have positively responded, so I will be scheduling a trip to the United States to meet with the USTR soon. This is a negotiation, and of course, in my opinion, the best possible outcome is a free trade agreement. No, a free trade agreement means zero tariffs on their side, zero tariffs on our side.
Well, the Philippines is backing ASEAN's collective decision to stay the course, choosing not to retaliate against the U.S. It's after President Donald Trump announced a pause on most reciprocal tariffs except those on China. Trade Secretary Cristina Roque says a full assessment is underway to gauge how these tariff shifts could affect ASEAN exports, supply chains, and growth prospects. She underscored the need for strategic mitigation plans to protect member economies, shore up investor confidence, and keep the region competitive amid mounting global trade uncertainty. Roque says ASEAN is now looking to fast-track new trade deals to strengthen supply chain resilience and diversify market access in the face of growing protectionism among major economies. As ASEAN seeks to diversify regional trade relations, the Philippines is taking its own steps to build strategic partnerships beyond the U.S. and China. The country is ramping up trade cooperation with New Zealand as both nations look to boost economic ties amid rising uncertainty in global markets. In a phone conversation with New Zealand Prime Minister Christopher Luxon, President Bongbong Marcos Jr. said they discussed ways to promote free and fair trade and strengthen bilateral cooperation in the years ahead. The call builds on last year's meeting in Manila, where both leaders pledged to increase trade between their countries by at least 50%. In 2023, New Zealand ranked as the Philippines' 28th largest trading partner, with total trade volume reaching nearly $500 million. This push to deepen ties reflects a wider strategy among ASEAN nations to strengthen relationships with non-traditional partners as they seek to insulate their economies from the impact of global protectionism. A global trade war looms, and the Philippines is running out of time to pick a side or strengthen its own turf. Economist Dr. Alvin Ang says the Philippines is already delayed in responding to the U.S. tariff blitz, warning that the country could lose key trade advantages to fast-moving neighbors like Vietnam. This comes as the U.S. jacked up tariffs on Chinese goods to 145%, prompting a global reshuffle in supply chains and a 90-day pause to renegotiate new terms. Ang says nearly 13% of Philippine exports to the U.S., especially electronics, are vulnerable to tariff exposure. Despite the window, the Philippines has not outlined a strategy. Ang urges urgent action, from rebranding MSME products to full-on renegotiation with the U.S. and ASEAN.
That means we are actually a bit delayed in our response. So we have to fast track it. Now that we know the numbers, we can track it down and see where it's going to affect us. And
the Philippines won't cut its holdings of U.S. Treasuries despite upheavals in global financial markets triggered by President Trump's evolving tariff actions. Bangko Sentral ng Pilipinas Governor Eli Remolona said Manila plans to diversify its foreign reserves that include investments such as U.S. Treasuries. The $29 trillion Treasury market saw intense volatility this week as Trump's changing trade policy eroded appetite for U.S. assets and raised questions on whether the nation's debt remains the world's favored haven. The Philippines had roughly $106 billion of foreign reserves at the end of March, of which about $88.6 billion are overseas investments. Analysts forecast 2 more rate cuts of 25 basis points each this year, likely in June and another in the third quarter. Security Bank research head and chief economist Angelo Taninco believes while last Thursday's 25 basis point cut aims to bring policy closer to neutral, a total of 3 rate cuts for the year would ease borrowing costs for consumers and businesses as early as the second quarter, even as equity targets are being reassessed amid deteriorating market sentiment.
This is very appropriate given this juncture, as the external headwinds have increased in light of the global trade war, as well as domestic inflation now subdued thanks to a lowering of rice prices, as well as a tempering of the oil prices. And as such, the Philippine inflation is well within the target range of the central bank, depicting a manageable inflation environment. And therefore, this would warrant the central bank to initiate again a rate cut in order for the policy rate to move from a restrictive level.
Taningo warns, though, that the trade war will continue to affect market sentiment and recommends tempering optimism with a cautious eye on global movements. On to corporate stories now. Macro Asia's water infrastructure arm has secured a 1.41 billion peso loan from Security Bank to fund a key desalination project in Lapu-Lapu City. Cebu Suma Water Lapu-Lapu, a subsidiary of Suma Water Resources, is 60% owned by Alucitan-led Macro Asia, formalized the agreement to build a 20 million liters per day plant in Punta Engaño, plus a smaller unit on Olango Island. Backed by a joint venture with the local government, this project is set to boost water security in Metro Cebu, with construction already underway since September last year. Meanwhile, Axelum Resources has delivered a strong comeback, posting a 688 million peso net income in 2024, a sharp reversal from last year's 818 million peso loss. Full-year sales of the Pangilinan-led agri-arm hit a record 7.3 billion pesos, up 29% on the back of volume growth in cocoa products, including a 37% surge in coconut water demand. The company also locked in a multi-year deal with U.S. giant Vita Coco. With a gross margin of 26% and EBITDA at 1.1 billion pesos, Axelum credits its strategic turnaround and export gains for the strong performance. Finally, Vismin's real estate boom continues as Cebu Landmasters rakes in 4 billion pesos in just 48 hours from its newest condo project in Cagayan de Oro. The One Manresa Place development, part of CLI's Manresa Town, saw units priced up to 18.5 million pesos quickly snapped up. According to Colliers, with 94% of CLI's inventory sold across 17 cities, the Soberano-led real estate firm remains the #1 residential developer in Vismin. Total sales from the project reached 5 billion pesos in just 2 weeks, reflecting deep demand for sustainably designed, amenity-rich living spaces. On to the markets now. Philippine shares extend its winning streak, ending in the green for the 3rd day in a row. The main index closed Friday in the green by less than 0.1% to 6082. Value turnover about 6.8 billion pesos. Still, perhaps there's little conviction in the gains as the all shares ended still in the red, and decliners edged out advancers 90 to 87. For the week, the PSEI is slightly lower by 0.3%. Mining and oil led advancers up 2 3/4%. Verizon led Apex Mining surged more than 6% for the day, while in financials, BDO led gains. Meanwhile, in the foreign exchange market, the peso is currently trading at 57 pesos and 12.5 centavos to the US dollar, stronger than Thursday's close of 57.35. And that's a wrap for today's Business Brief. I'm Raine Musñgi. Join us again next week as we bring you the stories that help you plan your next big, bold moves in business, only here on the Bilyonaryo News Channel. Always on time.
U.S. President Donald Trump's tariff threats may be making global headlines, but for now, the Philippines is in the clear. China remains in the crosshairs, but countries like ours have been granted a 3-month breather. Economic czar Frederick Goss said the country faces a 17% reciprocal tariff, relatively mild compared to others, but still a potential speed bump for some industries. In the car world, though, there's no panic. AutoHub Group boss Willie Teton, who oversees a garage of brands across the country, says Trump's trade drama has not rattled local dealers, aside from a few US-made Ford units.
The one that we need to monitor is probably the exchange rate. Because of the volatility now, the exchange rate, the interest rates, those are the things that we need to look into.
Thanks to existing free trade pacts with countries like Japan and China, where most local cars are sourced, tariffs are not driving prices up. Being part of ASEAN also keeps duties low, fueling regional trade.
As far as cars are concerned, most of them come from Southeast Asia, from Europe, from China. Konti lang yung galing sa US eh. Kaya, and even if it comes from the US, no effect naman sa taxes. Kaya okay lang.
Even aftermarket players are not sweating it. So while the global market shifts gears over trade tensions, local auto dealers are keeping it cool. For them, it's peso weakness and rising loan rates that are the real roadblocks. For BNC Mobility, G. Baroga.